Good morning, traders. Jtrader over here. So the title of the short lesson of today is how to build your account. How you can pass from a 25K account to a 500K account in less than 1 year. Is this possible? Is this a might? I can tell you that during the years, a lot of traders that I've been mentored, like Bus, Mac Trader on Twitter, Kyle DC, Carf, Charlie, and others became professional traders by simply adopting certain rules. First of all, you have to have a strategy. This means you have to know the stats of your setup, how many times your setup works, the win rate, the average win, average loss, what is your average target. Also, you have to track everything you trade, and this means journaling. It's very important. You cannot start with the intention to make millions. You have to start with the intention to become a good trader. This means trading successfully. In the beginning, you will need to trade paper. And then when you see that you are profitable in paper, you move to live trading. I would say by average, traders take between 3 and 6 months before they can find some form of consistency. There are other examples that I would say 2 or 3 months, they're already like profitable and they could go live. But even if you have a big account, let's say 500K, 1 million or more, try to start with a small account. I always keep one small account, and I did many small account challenges to show members how to grow their account. The last one was one of my cousins. I gave him a really small account below 3K, and he was able to move it to 50K in less than 6 months. Risk management is also important. The same trader. So my cousin in one day lost more than half of his account in just one trade. This is because he went completely, I would say, crazy, not respecting a stop loss, adding to that position and getting whipped. It's possible to lose everything one day. Yes, the same way that you can build an account small to a big account. We see this often, but it's not that everybody will be able to do this. I would say that 1% of the traders out there are able to repeat this kind of performance. This doesn't mean that you won't be profitable, that you can make your 4 figures per day. So now I'm going to explain you what over here, trader in my mentoring, the Playmaker from Washington, he did with his small account and how he did it, what he traded. So just watch. Over here, you can see his performance curve. We started with an account around 25K, and we started to study before at the starting of the year, right? So it took like a little bit of time before starting to have some consistency. And then once he started to learn which setups were his main niche, then he started to size in, but not right away the same size he's using right now. We started with 3K, 4K, 5K, 10K, and so on. So you have to build your account with patience. Don't be in a rush. This is what he has been doing over here. So the green and red days during the entire 9 months now that he traded. He is a plastic surgery doctor, so he cannot trade every single day. And that's the reason why also some days he couldn't trade. But also we have to say that certain days we didn't have setups. So it's not that every day you need to trade to make money. I'm going to explain over here one of the trades that is a part of our trading setup strategy, and it's F by O. So in this case, we have a stock that is gapping, all right? So when we have gappers, I always look at the previous high volume resistance levels and also the amount of bagels that we have. You have to consider that 70% of the gappers that we have since the starting of the year faded before the open of the market. This means that we have a huge hedge. This means that often we can trade pre-market. Over here, you can see my setup. I have on the left corner So over here, 1 minute chart. Over here, I have, we're going to put 5 minute chart over here exactly. Then I have a hourly chart, and then over here, a daily chart. Why all 4 charts? So the daily is the first one because I need to see the daily levels. In this case, I suggest you, this was the day, for example, that we're talking about. So this day over here of gap, I suggest you to look at the previous high volume days. So how to do that? You cannot consider every single day out there, and you don't really need to look at those days that are below the gap day. So the gap day is the day over here, all right? So you have to look for the high volume days above. High volume, when you talk about small caps, and this, for example, is what Playmaker, his name is William, he's doing, is at least 10 million. In the market we are having right now, very different from 2019, 2018, or 17, I would say that the minimum requirement of volume is 20 million. So this day we traded over here 20 million. All right. So that day will be in play, and I will consider fib levels from that day. So how to do? Let's do it together. Clear trading setups, drawings, and you press the bottom of your mouse. You go over here, Fibonacci retracement. You can do the same thing with Transpider. We have a discount trading link for them under the description. You place the top over here, which is the relative high top, and also you can see that that's the high volume day, and you trace it down here to this low. You want to see the relative low of the period. So 610 down till 280, 281. So on the daily chart, you can see definitely that we have levels 23%, 38, 50, 61.8, 78, and 100. If we go to the hourly, so the reason why I use the hourly is because often the pre-market and the after hours, so not often, sorry, the pre-market and the after hours are not on the daily chart, okay? So over here, that's the high volume day. And over here, we have the gap of that day. Once I see those levels, for example, over here, we had high volume. You can see we went to 3 million. This is hourly chart. I can put a resistance, and then we have another top over here and another top over here. So this level is a level of resistance, $5. All right. We have to consider this day. This day is the highest volume day. So we can see that we had low volume below $5. And then if we go over here, we had the high volume just above $5 until this. So we can put something like this, okay, like a box. When we go back to our trading day, you can see that the level of 5 is a clear resistance. Then we have all this level, okay? So we can really draw this until here. It's a decent level of resistance where we traded, remember, that day, 20 million. The day after, we traded 15 million. Now we have to look at the stats of FBIO. So let's look over here, FBIO. So you can see the stock has, let's wait over here, the key stats. We have a 300 million market cap. We have 62 million float. We have an institutional ownership of 30%, so pretty high institutional ownership. And then we can look at the financials. So let's just look over here. Financials, they have 274 million of cash. So they still have cash, right? They have a negative net income, minus 3.50, and they have a burn per month, 11, all right? So they have at least more than 1 year of cash still. Remember what we said before, 70% of the gappers tend to fade before the open. And also by tracking, more than 70% tend to fade on day one. I suggest you to do one more thing. So look at the bag holders in pre-market. Look at that fibs. all right? And then look at your volume profile. You can use the 1 hour, the daily. I like the 4 hours a lot. So if we look over here, this is our 4-hour chart. You will see that these levels that are red, okay, besides this one, all right? So I'm gonna point at this, 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 this. This is the, or high volume node, you can say, or the point of control. So this means that at this place, we had the majority of volume traded. If we go over here back and we start looking, what is the highest volume day? This day over here. And what is the high volume node? What is the point of control? This level, all right? And the day before, the month before was this one. And remember, we still had volume. So this day and this day over here. And then we don't have any more high volume. So I would say that this level over here is the high volume level, okay? Now we can do the same thing as we did before with the gray zone. So let's do like this. And this is something you have to do pre-market every single time. So this is the level that I'm interested in. Now we can clear everything else and we can look at our plan. So we have over here the hourly, we have the 4 hours, and over here we can put now the daily. We have the 5 minutes, and then we have the 1 minute. So for example, we have the push of this stock. You can see over here in pre-market when the news comes out to 418. And then often we have these pullbacks, all right? So I'm gonna put over here this bigger, okay? So that we can see the price action better. Remember, this level over here, this small gray is the fib level, 50%. So we have 50% level, okay? Let's write over here. So we have the, let me zoom out a little bit so we can see the full picture. Okay, we have a few things over here. 50% level, exactly at 446. Then we have 450 half dollar number. Remember, the half dollar whole dollar numbers are important levels where basically often you will see big traders or big ends, okay, the sharks trading. Then we have the gray bag holders zone. Okay, so what we saw before is that at this volume we traded, at this level, sorry, we trade a lot of volume. And then we have the volume profile, high volume node, okay, high VN, high volume node. So where we had, again, the majority of the volume traded in the past. All these 4 things start to create a plan, start to create a bias, all right? And then we only need to look for the timing entry. And you will see in pre-market that often we make this kind of setup. So this is a blank chart. I don't draw good, but I just want to show you. This is the pre-market, okay? So in this case, we have F by O. Often we have this kind of pre-market. And then when pre-market, we have a reversal, I'm not really looking to trade at this level because as we did before, we did a small pullback and then we continued up. So I'm looking at key levels. I'm looking in this case at over here, we can do this. I'm looking in this case at the 450. I'm looking at the high volume node. I'm looking at VWAP as well. So this is our VWAP, let's say. And then when I have my price action starting to fade, okay, sorry, I will do this black. So starting to fade and give me a rejection of this level, okay, I'm looking to short exactly into this area. This is a setup that often happens. Where to put the stop just above our level over here of entry. So you don't want to risk the pre-market highs. So going back to our trade over here, so this we can close it. We saw that the price goes above, comes back below, and at a certain point over here, we start rejecting. And you can see that the 90-MA how close right below the VWAP and incorporates over here a bar, and then does this again, and then does this again. And you can see that the volume is a fading volume. So we don't have volume spiking back up, being strong, but we have a volume that is a fader. So this is our level too short with a stop just above. So this is one example of what we teach in small cap room. This is one of the stocks that, for example, the playmaker traded, and this is one of the setup that he likes to trade in order to build his account. So this was a short lesson. If you like, subscribe to the YouTube channel. Don't miss, every single day we have live stream trading from 8:30 till 9:25 a.m. East. Tomorrow we're going to have a webinar with Alexandra, scalper on the big caps. So thank you, everybody. Join us. Come to see what we're trading live, explain the setups, not really pumping the stocks. We don't do that. We really teach traders how to trade. And why I say that? Because members say that. Over here, you can see HMX doing a paycheck. Over here, you can see Gemma doing a paycheck. And over here, what Victor says. The knowledge you give us makes us independent, not a pumper. So thank you very much, traders. See you next time.